China's economy grew 7.4% in the third quarter compared to the previous year, marking a deceleration from a 7.6% growth rate. This is shedding more light on where the world's second biggest economy is headed. For more, Phillip joins us from Hong Kong. Phillip.
Hey, Michelle, how are you? Good to see you. You know, the past 24, 48 hours here in Hong Kong has been very enlightening because as you talk to different bankers and you talk to different investors on the ground, you get a real sense of the importance of the Chinese economy and how important it is to the economies of not just here in Hong Kong, but to other economies around the world. Let me just go through the numbers that came out yesterday. I think we've got a graphic here on China GDP. You mentioned it earlier, 7.4% for the GDP figures for the past quarter. But don't forget, there was a plethora of other numbers that came out. I want to also highlight the retail sales figures. That came in at 14.2%, which was a little bit better than expected. And that leads us to a number of other interesting notes about how the Chinese economy may be rebounding. Take a listen to this.
We're fully confident that we can achieve the 7.5% growth target for the whole year, since the previous 3 quarters have laid a solid foundation.
All right, you heard there that the spokesperson for the government is saying that it looks like the economy is rebound. And that is consistent, by the way, with what a lot of banks are saying. Citibank, for example, says that they're expecting additional reserve rate requirement cuts because it may help some of the banks in China offset some of their tight loan situation, and they see an additional rebound in the fourth quarter of this year. Now, with us today, we've got a special guest at UBS. Now, a lot of you folks out there watching have retail bank accounts. You walk into a store, you open an account. Then there's the private banking. And then there's a whole nother category called the ultra-high net worth category. Enrico Mattoli, Managing Director over at UBS, Head of Investments and Product Services for ultra-high net worth individuals, joins us right now. Give us a sense of the mood and the reaction to these GDP numbers and how significant they are.
Good morning, Philip. Yes, thank you. We're in line here as well. We think that the 7.4 print for the GDP is a low at the moment, and we're constructive going forward. We think that it's going to have a cyclical upswing driven by the inventory restocking, export improvement, infrastructure investment. Therefore, we've actually been telling clients to put money to work in China A shares, which are attractively valued.
So you like China?
Yeah, we're overweight China. We've been overweight from the beginning of the year, and now it's starting to work.
Okay. I know the guys back in Washington, D.C. and Beijing are probably asking this question is, what is ultra high net worth individuals? It's very rich. What does it take to be a client?
For ultra high net worth at UBS, we would want to see $50 million deposited with the bank, but it's more than just the cash.
You said 50 million.
50 million, and actually Swiss francs. But anyway, the important thing here is that it's not so much about the cash; it's about the services that UBS can provide.
Okay, so let's say our producer Josh O'Connor wins the lottery.
Yes.
He walks in, he says, I've got $50 million. What are you advising the clients to do with these money? Are they being very conservative in protecting their money, or are they being very aggressive to put it into the stock market? Because we've had a very difficult stock market the last year.
Okay, look, the advice that I would give to your lucky producer would be driven by the view that the House has, which is given by our CIO. Okay, currently our CIO has been overweight and is overweight credit, which has been a very good call. High yield bonds in the US, which have returned over 42% since September 09 when he put it on, 12% year to date. And at the same time, we've been overweight corporate bonds. And there we've been saying to take some profits.
So these are all very conservative investments. What happened to the days of people buying into the stock market? We know the stock market's been very volatile. What's stopping people from piling into the stock market?
General macro uncertainty, the headlines coming out of Europe for the past 12 months, the sort of weak U.S. economy that we are seeing at the beginning of the year, although now we've clearly seen a slew of positive economic data. So on the equity front, we have been neutral equities, and we were allocating overweight to the United States, underweight to Europe, overweight to emerging markets, and China.
Wealthy Chinese individuals come to you. They have different sets of expectations and different sets of challenges that perhaps other wealthy clients around the world may not be facing. What's the number one challenge in managing clients from China?
Well, China ultra high net worth clients are first-generation entrepreneurs. They're out there making the money every day in one of the most exciting markets in the world. Therefore, the majority of their wealth is actually tied in their operating business. They thus have very high return expectations. Allocating to financial instruments versus their operating business has a high negative opportunity cost. Therefore, they tend to be more aggressive in their return expectations, and they are also happy to employ leverage. At the same time, they will invest in stocks and companies that they understand. They have a home bias to invest here in Hong Kong in 8 shares. They've been investing in banks, and they're also happy to put money through work through structured products.
All right. Enrico Mattoli, I want to thank you for your time joining us for this very special segment of Biz Asia America. So there you have it, Michelle McCorry in New York City. You might have $50 million bucks in the bank, but in case you don't, you just got $50 million bucks worth of advice. Michelle?
Thanks very much for that insight, Phillip, again live for us in Hong Kong.